And gentlemen, good day and welcome to Rane Group Investor Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Diwakar Pingre from EY. Thank you, and over to you.
Thank you, Ashashri. Good evening, friends. Welcome to the investor call of the Rane Group. To discuss an announcement and answer your questions today, we have the management team from Rane Group, represented by Mr. L. Ganesh, Chairman and Managing Director, Rane Holdings Limited, Mr. Harish Lakshman, Vice Chairman, Rane Holdings Limited, Mr. P. A. Padmanabhan, President, Finance and Group CFO, Mr. Shiva Chandrasekharan, Senior Executive Vice President of Secretarial and Legal Services, and Mr. M.A.P. Sridhar Kumar, Executive Vice President, Finance and CFO of Rane Holdings Limited. Please note that we have sent you the press release, and also we have sent you the presentation link of the deck, which is also available on the webcast as we speak. In case, and if you have not seen the presentation, you could look at it on the website or even the BSE side of Rane. Or you could write to us, and we'll be happy to send a detailed earnings presentation over to you. Before we start, I would like to say that everything that is said on this call that reflects any outlook for the future, which can be constituted as a forward-looking statement, must be viewed in conjunction with the risks and uncertainties that we face. These uncertainties and risks are included but not limited to what we mentioned in the prospectus and subsequently in the annual reports which you can find on the website. With that said, now I'll hand over the call to Mr. Ganesh. Ganesh, sir, over to you.
Thank you, Diwakar. Good evening, ladies and gentlemen. I welcome you all to this special investor call to discuss the proposed reorganization in the group. Over the many years of interaction with investors and analysts, we have received many inputs from all of you, one of them being on simplification of the group structure. We have also been internally exploring various options for doing the same, consolidating, restructuring the operating entities. Today, the boards of Rane Madras Limited, Rane Brake Lining Limited, and Rane Engine Valve Limited have approved the merger of RBL and REVL into RML. I hope you had a chance to go through the presentation on the proposed reorganization that was uploaded on the stock exchange website. We will quickly run you through the highlights of the presentation again on this call and post which we will address any questions that you may have. Rane Group is one of the leading auto component players that manufactures safety critical components such as steering and suspension systems, friction materials, valve frame components, occupant safety systems, and light metal casting products, as you are all aware. Our products serve a variety of industry segments: passenger vehicles, commercial vehicles, farm tractors, two-wheelers, three-wheelers, railways, and stationary engines. We are today a group with a turnover of about 6,700 crores, and despite some industry headwinds over the last few years, we have grown at a CAGR of about 9%, operating through 27 manufacturing facilities and having a market or customer presence in 30 geographies. This would not have been possible without the support of about 14,000 plus employees that Rane has. Today, the group operates through a parent company, Rane Holdings Limited, which is a listed entity, and has 3 listed subsidiaries and 2 joint ventures. We have considered the listed subsidiaries, namely Rane Madras, Engine Valve, and Rane Brake Lining, for the proposed reorganization. The proposed interstate merger among the subsidiaries envisages merger of REVL and RBL into RML with the broad objectives as follows: simplification of the group structure, brings down the number of listed entities in the group, unlock some synergies from the unification of the businesses, optimization of support functions, enhance operational and financial synergies as well as scale, and create a strong platform for future growth. Large listed entity increases our flexibility to raise capital if and when necessary for growth pursuits. All the above will unlock value for the group, we believe. In addition to growing the existing businesses, the single entity will be a strong platform for nurturing new businesses going forward and capturing some of the opportunities ahead for us in an industry that is poised for very strong structural growth. Independent valuation exercise was conducted for this by PwC and Mrs. Bansi S. Mehta. The registered valuers recommended the merger share exchange ratios. Fairness opinion of the recommended share exchange ratio was obtained from 3 merchant bankers. Axis Capital provided the same for the board of Rane Madras. Motilal Oswal provided the fairness opinion to the board of Rane Bricklining, and Centrum Capital provided the fairness opinion to the board of Rane Engine Valves. The recommended swap ratio is as under. RBL shareholders will receive 21 fully paid shares of RML for 20 fully paid shares of RBL held on the record date, and REBL shareholders will receive 9 fully paid equity shares of RML for 20 fully paid equity shares of REBL held by them on the record date. Based on independent valuation and recommended swap ratios, the post-scheme holding structure will be as in this slide. With these comments, we will open for any questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Sunil Kothari from Unique PMS. Please go ahead.
Thank you, sir, for the opportunity, and really a great move. My hearty congratulations. Sir, after this 5-6 years challenging time, we have taken really a bold decision by hiring of our American subsidiary. Now we are merging this, and it seems that we are sure and we want to grow more than what we achieved during last 5-10 years. So my best wishes and hearty congratulations for this. Sir, my question is broadly, whenever we do this size of activity and reorganize our structure, we always focus on reducing cost and improving profitability, improving ROIs, and improving our scale of growth. So if you can talk a little bit more without giving maybe some numbers, but how we want to move ahead with this 20 listed companies plants, removing this unlisted subsidiaries of 7 plants, how we restructure, synergize, and what benefits in terms of organizational structure, operational efficiencies, and financial efficiency will help us.
Thank you, Sunil. And I know that you have been a well-wisher of the group for a long time, and this is also something that has been asked by the investor community for many years. So I'm very happy that the board has approved this decision of today. As explained briefly by Mr. Ganesh, we all know that the automotive industry over the next 10 years is going to see a lot of growth, and also there is also while there is going to be growth, there is also significant shift that is happening in terms of technologies, with EV, etc. And on the other hand, we are also seeing that scale is becoming more and more important, not only from a business standpoint, but also from an investor and stock exchange standpoint. So considering all of these, we decided that this was a step in the right direction. And of course, as you are very well aware, we have 3 distinct product lines. One is the steering and steering components related business. The second, of course, is the engine valve business, and the third is Rane brake lining. Now, while there is a lot of overlap in terms of customers across these three businesses, there are also customers that don't overlap, and especially when you look at export markets, each of the company has different strengths in different geographies. So we believe that combining these businesses can accelerate growth faster for all the three businesses through some cross-selling as well as some capitalization on customers in the other geographies. The second is, of course, is also synergies relating to costs that can be extracted through this merger. There are some ready synergies that will be available in terms of regulatory and compliance related costs, having three listed entities versus one. There will also be better access to capital, ability to negotiate debt, etc. There will be tax savings possibilities. So there are some immediate possibilities that we see, and also certain more medium-term to long-term cost savings through support, commonization of support functions, etc. So obviously, we have just worked on the merger right now, and obviously the immediate savings, whatever is available, that we will try and capitalize once the merger is complete, and then start working on some of the medium-term and long-term plans.
Yeah, right. So, Harish, on this, is there any possibility of shifting, say, some of the lines to some bigger plants which help us to give us cost reduction and improve our productivity? Those type of possibilities will be there between these 20 plants?
Yes, definitely. I mean, those are all synergies, that is possible as we go forward now, because we'll have all these factories under one legal entity. So ability to use all assets, whether it is equipment, whether it is plant, labor, capital, land, everything can be used in a more efficient way.
Right. And sir, there are two major cost components which little bit we can try to improve upon and reduce the cost. One is employee cost, which is almost 12.7% as per presentation, and other expenses 19%. So where you see the scope and what type of scope is there? If you don't want to quantify, fine, but is there any scope to reduce this in a respectable manner?
Yeah, I definitely cannot give any numbers at this point in time, and as I explained, the focus is going to be on growth, and through accelerated growth, we expect some of these costs as a percentage to sales to definitely improve.
Mm-hmm. Sir, last question is, we are really making good EBITDA, respectable EBIT, but unfortunately because of some last year's this accumulated debt and interest burden, almost 30-40% of our EBIT is going towards interest payment. So any thought process on this? Mr. Ganesh also last year told that we have our some final plan to reduce the debt. So if you can talk something more on this reducing interest burden, and so that will help us to grow faster and give us strength to invest more, like we planned Mexico plan.
Yeah. No, definitely, as we have mentioned in earlier calls and as Mr. Ganesh has also said, reducing debt, even for this combined entity, is a important objective of ours. We are still working on various plans on how to achieve that. So as and when we take certain decisions, we will definitely share with all the investors.
Thank you, sir. Wish you good luck, and we are in full support of you. Thank you.
Thank you.
Thank you. The next question is from the line of Manish Attal from Attal and Associates. Please go ahead.
Congratulations on your numbers, sir. I am fairly new to this company, so just wanted to know this Rane brake lining. So are you have got recently some approvals from railways for composite brake pads and all, right? So where do you see your capacities with this, sir? And do you see railways as a big part of your revenues going forward? And are you able to get more business, or is there any, is there any possibility to divide, get into R&D for some good products in railways?
Is that the question?
Yes, this is my first question. Yeah.
So railways, basically Rane Brake Linings has been in railways traditionally for many years, and then we kind of quit that business over a period of time because there was a lot of competition, unorganized competition and pricing pressures. But what is happening recently with the arrival of metro and with the arrival of LHP coaches and higher speed trains like Vande Bharat, the technology requirement of brake pads and brake blocks have gone up. So we find an opportunity for players like us to come back into the market with quality products. So therefore, the recent orders, we have got very good order position with all the metros already and with the LHP and some of the new railways. So will it be a significant part of the total sales? May not be. The volumes are not anywhere near automotive requirements, so it won't be. But as long as it's a profitable business, we will certainly grow that business.
Okay, fair enough. What about Rane Brake Linings? Is there any possibility of you manufacturing brake shoe in future? Because now it's an integrated entity, right? So do you also see yourself getting into that category or adding new categories into automotive? Because
we are
now will be an integrated player, right?
We are making some brake shoes for aftermarket already. So slowly we have entered the brake shoe market in the aftermarket. So not in OE yet, but in the aftermarket, we will want to grow that business.
Sir, what are the numbers? If you can give me the numbers.
I think we just started. So it's coincidence that you're asking now. So maybe over the next 2-3 years, we'll build some volume.
Okay. And one more thing, sir, like the strategy behind getting this, integration of all our companies into one company. This one way it is going to bring you synergies. But what was the reasoning? The major reasoning behind getting these three into one now at this point of time. Because you have mentioned that getting funds, organic and inorganic growth and all, it will help you. But don't you feel that individuality of the companies would be lost by integrating them?
So as I explained earlier, the idea is to create a larger sized company, because ultimately we are all in the auto components industry and with a lot of customer overlap. So the size will create more flexibility, and all these three companies will, now post the merger, will be continued to be run as separate divisions of the merged entity. So the respective divisions will be continued to focus on their product line, their strategy and their growth. And as you know, many auto component companies, not only Indian companies but many global companies, they have a wide array of products in their portfolio which are very different but being run as divisions. So what we are doing is not something new, but many autocom players perform this way. And for us, our three listed companies is historical. All these three companies, became public limited in the 50s and 60s at that point in time to raise capital. So now with things when the times that have changed, we believe that this larger entity will bring us back faster growth and better focus.
Great, fair enough, sir. And one more thing, just wanted to know is that Rane, as such, is it like, what is our exposure to EVs and what portion of our revenues? I'm talking about the merged entity. How much portion of it, if you can quantify it, could be right now from EVs, or we are developing for EVs?
No, that's right. Just 1 minute. So, yeah, 1 minute. So, if you see our, the merged entity is going to be fairly diversified. 58% of our sales is going to come from PV segment, passenger vehicle, and 21% from commercial vehicle segment. 9% is farm tractor, 6% is two-wheeler, three-wheeler, and 6% is others. So, the risk of immediate EV is only in the two-wheeler and passenger vehicle. And I'm also happy to let you know that more than 85% of Rane Group sales is EV agnostic. Totally agnostic. So even if the whole world switched to electric tomorrow, 85% of our sales will remain intact. But having said that, we are focusing on EV sector, especially in export market, and many of the recent export orders that we have won and we've been sharing with the investors in the last few calls, many of them are EV related in Europe and US.
Okay. All right, sir. All the best. Thank you.
Thank you. We have our next question from the line of Rajakumar Vaidyanathan, an individual investor. Please go ahead.
Yeah, good evening, gentlemen. First of all, congratulations for the proposed amalgamation. Good to see that you people are leveraging the expertise of Mr. Vikram Vasangadi, So it's really nice, sir. So a few questions. First one, I want to know what is the rationale for not pursuing the merger at Rane Holdings level, but at Rane Madras level? So is there a reason you are not pursued it at RHL level?
Yeah. Yes. So the answer to that question is, as you know, under Rane Holdings, we had these 3 listed subsidiaries, and the other 2 are joint ventures. Where Rane Holdings is a 49% shareholder, and as you know, ZF owns 51% in one and NSK owns 51% in the other. So as a result of this, there are partners involved, their technology, their view on the strategies of the company, etc. So given that we have joint venture partners, we have decided that we will keep that separate from our own listed subsidiaries.
Because that would have benefited the RHL shareholders also, because now this merger only benefits the 3 companies, but not RHL. RHL continues to be a holding company. So the holding company discount will still remain.
Correct. Yeah.
So is the warranty issue at one of the JVs, was that a reason that you didn't pursue it at RHL level?
Sorry, can you repeat the question?
No, you have a warranty issue at the NSK venture, right? So was that a reason that you didn't want to expose the other entities?
No. The warranty has got nothing to do with it. As a strategy, because we don't want to combine, our own listed subsidiaries with joint venture companies where there are global players involved.
Okay. So, sir, just to labor on the same question, so you will not be pursuing one more merger at RHL level, or you are leaving it open for the future?
See, it's never easy to answer this question. As of now, this is our plan, and let's see how slowly market and things evolve.
Okay. And sir, can you also give the near-term synergy benefits in terms of a ballpark number, like in the next 12 months, and then medium to, say, 2 to 3 years, what benefits you will be getting? And will there be any consolidation of facilities, because some of the facilities could be fungible in terms of capacity, so some of the overlaps, we could kind of merge, and then we can also look at monetizing some of the land holdings. So if you could please comment on that.
Yeah, unfortunately, we are not in a position to have any numbers at this stage. In fact, the merger itself is going to take, I think, 7 to 9 months to complete. So the benefits of synergies will kick in only after that. So we are only, probably by only January 2025, we can start looking at the synergies. And the other part of your question about using existing plants and surplus real estate, etc., that is more in the medium term. And as and when we have a clear plan, we will share it with the investors.
Okay. And sir, I also have these entities that you are merging. They are paying some charges, professional charges, trademark fee, and so forth. So cumulatively, it comes to about 35 crores based on your 22-23 results. So will there be any savings on this, or it will remain more or less the same number?
I'm not able to comment. You're talking of Rane Holdings, is it?
Yeah, no, the RML, RBL, and RVL, they all pay some charges to the holding company, right? So some professional charges and trademark fee to Rane Holdings.
Yes, that will continue. There will not be any significant change in that.
So there will not be any significant savings there.
Yeah.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, please restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We'll take the next question from the line of Manish Goyal from ThinkWise Wealth Managers. Please go ahead.
Yeah, hello. Very hearty congratulations, sir. Excellent move for shareholders altogether, sir. Thank you so much. Sir, just a couple of questions. First on the, again, I'll probably talk on the debt part, which I think combined entity would have almost 800 crores of debt with annual interest outgo of 55 to 60 crores at this moment. So, and while on other side, we'll probably have a cash flow generation of both depreciation of 3 companies put together, 120 crores and 120 crores of profit. So roughly 250 crores of cash flow generation in near future, and probably that will go up to maybe 300 plus crores. So just want to get a sense that what would be our capex plan, how much would be cash flow can go towards capex, and will there be enough cash available to repay debt, or probably then look to monetizing asset in near term, sir?
So, Manish, it's a little too early for us to answer this question. As I explained earlier, the merger itself will be effective only from, hopefully by January 2025. And so any sort of major restructuring plan of debt or even real estate, etc., will happen only post the merger. So we will need more time to answer some of these questions. Maybe 6 months, 9 months down the line, we'll have better insights.
Sure, sir. But at least on the capex side, would it be possible to indicate as to what would be our annual capex plan going forward?
So, on average, we have been investing around 300 to 350 crores when the industry is on an upcycle, especially if you look at last couple of years. I expect the capex to continue in that range of about 300 crores. Of course, this includes the joint ventures, and out of which, as you are very well aware, a significant portion of that capex has been going for our seatbelt and airbag business. But if you look at the 3 combined entities, we have been investing on average about 140 to 150 crores. That will continue. Assuming the automotive market continues to grow strong, and we have strong single-digit, if not double-digit growth.
Sure. Okay. And sir, on the for Rane Madras, now we have proposed to set up a subsidiary in Mexico, and you did come out with a press release in terms of what are your near-term plans of investment of $3 million to $6 million, and you probably have immediate visibility of some 80 crores and potential of 250 crores incremental. So, sir, by when do you think that we should be able to start generating revenues, number one, and number two, and probably when do we see, maybe next 2 years or 3 years, what kind of revenue we can achieve over there? And also related question is that, so now basically we have exited the US subsidiary, but probably we definitely would have got a lot of learnings from that. So how well we are prepared and probably to probably make it a success of this new venture in overseas market. And also because now we are going to address this into ball joints in EV segment, which again is probably, I believe, a niche segment for us. So if you can give us some perspective over this, sir.
Yeah, sure. So I'll try and answer all your questions. So the revenue generation is expected to start only in the second half of 2025. So this plant, obviously is a commitment that we are making for the long term. And of course, we have already secured, one customer order which goes into production in second half of 2025. What we are hopeful is between now and then we are able to secure few more orders with either the same customer as well as some other customers as well. And of course, our strategy clearly is to not rely only on the EV segment in North America. So we are trying to work on some non-EV segments as well. As of course, as you know, our product is agnostic, whether it is EV or non-EV. So that way, we diversify the risk. And as far as the learnings are concerned, yes, of course, there are a lot of learnings, that we have had from the investment, our US investment, including, the kind of management that we put in place from day one, and, the systems and processes that we are using. So we have taken all those learnings and we are trying to, we are putting them in place from day one in Mexico. So we are hopeful that, we will be able to get it right this time.
Sure, sir. And in terms of, so will it be that a lot of products will go from the Indian entity over there, or what will be the nature of the manufacturing? Will it be assembly oriented or manufacturing setup over there? And how will it be scaled up?
So, yeah, it will be gradually scale up. Yes. So, obviously, the mother plant will be based here in India, and we will be starting with assembly as well as some limited machining in phase 1. And then, as and when our order booking increases, we will, start investing that higher amounts to increase the value add over there.
And related question is that, was it that probably customers are asking for nearshoring and to probably have a better supply chain management? That was one of the reasons to probably set up a subsidiary in Mexico and not only supply from India?
Yes, very much. Because of, customers wanting to have something which is more local, and also the new USMCA agreements that has been signed, favors investments in North America, and given the, inherent cost advantage of Mexico, that turns out to be an obvious choice. And in fact, many of our customers, while they are American companies, most of our supplies are likely to be to Mexico plants.
Okay, fine, sir. And last request, sir, maybe if, as you had started sharing the quarterly numbers of the JVs, probably we have missed out this time. So if you can, at a later stage, you can also share the numbers of the JVs, it will be very helpful, sir. Yeah.
Definitely, Manish. We have taken your inputs from last time, and as you know, the Rane Holdings board meeting got over yesterday, so very soon you will be seeing the presentation.
Right, sir. And really last question. So hopefully now Rane NSK, the issue is behind, and most of the provisions what we have done, we don't expect any more provisions going forward. Right,
yes.
Sir?
Yes.
Wonderful, sir. Thank you once again and congratulations, sir.
Thank you.
Thank you. The next question is from the line of Krishna Kumar from Lion Hill Capital. Please go ahead.
Good evening, sir. Congratulations on this.
Also, may I request you to use your handset mode, please? It's not very clear.
Yeah. Good evening. Congratulations on this merger of the three listed entities. And I think Rane Group has been doing step by step in terms of what Shareholders have been kind of requesting you. And I'm sure you will see merit in probably merging Rane Madras into Rane Holding at a future date. given that it's only a holding that is there in the Rane holding of the JVs. So I just wanted a clarification on the new initiatives. If and when we do any joint venture with a technology provider or foreign partner, does the structure now mean that JV will be housed in Rane Holding, whereas any independent initiatives of Rane Group will be done through Rane Madras listed entity? Is that the way to understand the thought process, sir?
By and large, yes, Krishna Kumar. The idea is the idea is to grow our three listed subsidiaries where we have control of the business. So now, if you ask me if it is possible where we are a majority shareholder in the joint venture, I don't know. Maybe even in this newly created Rane Madras is a possibility. But if it is going to depends on the strategy, if it's going to be largely India-based and we are technologically dependent, then the concept is to use the existing structure.
Sure, sir. Thanks for that. And just to get the numbers, sir, on the revised merged basis, roughly the market cap of Rane Madras together consolidated would be about 2,100 crores at current prices. Is that mathematically a right number?
I thought current RML market cap is around 1,200 crores.
Yeah. That's what. After the issue of new shares on consolidation, mathematics is like 2,100 crores. So is that right understanding?
Around 2,300 crores.
Okay. Sure. Thank you, sir. Thank you very much.
Thank you. We have our next question from the line of Rajakumar Vaidyanathan, an individual investor. Please go ahead.
Yeah, thank you, sir, for the follow-up. So just two questions. So I just want to know, will we be looking at any inorganic opportunities as well, or are we only looking at consummating the merger?
Inorganic, you said, is it?
Yeah.
Yeah, I mean, definitely we are not averse to looking at, acquisitions in the future. Inorganic, as we have said in the past, is part of one of our strategies for growth. Yeah, we are not looking at anything right now, and in all likelihood, unless something significant comes up, I don't see us doing anything till this merger is completed.
Okay. And so the next question is, will you now look at institutionalizing the shareholding also now that you will have a scale? So I just request you to reach out to the financial institution so that you have the stock is stable and it's appreciated.
Yeah, no, definitely that is one of our objectives. Thank you.
Yeah, thank you, sir. All the best.
Thank you. We have our next question from the line of Sunil M. Kothari from Unique PMS. Please go ahead.
Thanks for the opportunity again. There is something on this exports opportunity which we are now focusing through Mexico. We are globally very proven. Hello, you are getting my voice?
Yeah, we are able to hear you.
Oh, sure. So ball joints, rack and pinion, and now hydraulic is also seems to be a focus area. And aluminum die casting is also very now successfully we have overcome all these challenges. So if you can talk a little bit more on all this segment, exports opportunity, and what we are doing more to grow this for the whole segment.
So as you are aware, in the last 24 months, there has been good growth in our export business, especially in RML. And of course, even REVL, we grew during this current financial year. And as I said earlier, the opportunities have increased. Clearly, we are seeing the China plus one, global strategy being followed by many European and American customers, benefiting us. So our RFQ pipeline has definitely increased in the last, 12 to 18 months. So we are also hopeful that, we can convert some of this into business. So, there is a lot of time and effort that our management is spending in growing the export business. More aggressive targets are being taken. As you know, we have sales offices both in US and in Europe. They are also being strengthened. So all activities are going on. And of course, post this merger, as I said earlier, now Rane Brake Lining also is trying to take on aggressive targets for exports, and they will also benefit through this process.
Great, sir. Nice to hear. Thank you very much. Wish you good luck.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Chirag Shah from White Pine. Please go ahead.
So 2 questions. One, sir, in each of these businesses, what are the utilization levels? Well, that is the question number 1.
Yeah, just 1 second. Let me go to that. Yeah. So see, if you, obviously it varies product to product, and now, with these 3 companies, we have almost 8-9 products, but I can say that most of our products, the capacity utilization is in the 75% range. Because of the good growth that the automotive industry has seen in the last 24 months. As you know, passenger vehicle is at an all-time high record. Two-wheeler has almost come back to the peak. CV is heading in that direction, all going well. Next year, we should be at an all-time high record. So, therefore, the capacity utilizations are in the high 75, going to 80% range.
And it can actually go up to about 85% level, given the seasonality?
Yes.
Okay. And sir, how would your customer profile now look like after the 3 merged entities? Not the segment profile, but how the customer mix, top 3, top 5 customers who would be, and if not individually aggregate, how much they will be?
Yeah, so there will be no major change. As I said, there is significant overlap, between the customers of the 3 entities. Of course, only in the case of Rane Brake Lining, we are a tier 2 business, so the brake manufacturers are the largest, but there will be no significant change. Our top 3 or 4 customers will continue to be the same.
Okay.
Whether it is Maruti, Tata, Mahindra, Leyland, Brakes India, etc.
Okay. Thank you very much.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. As there are no further questions, I now hand the conference over to management for closing comments. Over to you, sir.
So thank you very much for your participation. I hope that this merger will achieve the objectives which we stated and give better returns to shareholders. We are also focusing on higher growth, as Harish mentioned, and some cost optimization after the merger is completed, with more exports and better growth in the future. We hope to perform better as a group. Thank you very much.
Thank you, sir. On behalf of Rane Holdings Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.